Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets companies don't want you to see. Today we are looking at Centerspace and a recent announcement they made about a big sale. So what does this actually mean for the company and its investors? Well, Centerspace has just announced they are selling off some of their apartment buildings or communities, as they call them in St. Cloud. This is a pretty common move for real estate companies. They sometimes sell off properties to focus on other areas or to free up cash. Now let's talk about the really important stuff, the financial impact of this sale. This filing is a little light on the deep financial numbers you might expect from a quarter report, but it does give us a couple of key pieces of information. We see that their common shares are traded on the New York Stock Exchange under the ticker symbol CSR. This tells us that Centerspace is a publicly traded company, meaning their performance is under constant scrutiny. The big news here is the accompanying press release. What this filing is essentially doing is telling us that Centerspace released some information on the 23rd of September 2025 that they wanted to share with everyone under what they call Regulation FD, or Regulation Fair Disclosure. This essentially means they are making sure that when they share important news, it goes out to everyone at the same time instead of leaking it to just a few people. It is all about transparency. The press release itself details the disposal of their St. Cloud communities. We can assume this is a strategic move to either improve their financial position or to refocus their investment in properties that offer better growth potential. Selling off communities might mean they are streamlining their operations, or perhaps divesting from markets they see as less promising for future returns. On a broader level, companies like Centerspace are constantly managing their property portfolios. Selling some assets while potentially acquiring others is just part of the business cycle. Cloud communities were performing well before the sale and what they are getting for them. Without the full financial details from the press release, it is hard to put a precise number on the impact. However, filings like this are important because they are the official record of these corporate actions. Now, looking at this filing from a strategic perspective, Centerspace seems to be making active decisions about its real estate assets. Divesting can be a sign of strength if they are reinvesting that capital into more profitable ventures, or if it helps them reduce debt. Alternatively, it could signal a need for cash or a lack of confidence in those specific markets. We don't have enough detailed financial information here to say for sure, but typically a company will make such a sale to either achieve a better return on investment elsewhere or to cut losses on underperforming assets. To truly assess the impact, we would need to see the detailed financials from the press release mentioned here. This Form 8, K, is more of an announcement and a confirmation that they have released information. The real analysis comes from understanding what that press release says about the financial terms of the sale, the amount of money they received, and what they plan to do with those funds. Are they paying down debt? Are they using it for new acquisitions, or is it simply to boost short-term liquidity? From what we can see, Centerspace is a real estate investment company focused on apartments or residential properties. Their stock is traded on a major exchange, so they are subject to all the rules and regulations of public companies. This sale is one of many strategic moves they likely make throughout the year to manage their portfolio. So what is my take on this? This is a typical corporate action for a real estate company. The key here is the why behind the sale and the financial benefit Centerspace gains. Without the actual numbers from the press release, it is just an announcement. However, as investors or observers, we can infer that they are making a deliberate choice about their property holdings. It suggests a company that is actively managing its business rather than just letting it run on autopilot. The risk is that they might be selling good assets to cover for issues elsewhere, or that the cash from the sale won't be deployed effectively. The opportunity lies in their ability to reinvest that capital into higher growth areas. Alright, that is our quick decode of this Centerspace filing. What are your thoughts on companies selling off parts of their business? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives, and for even more exclusive insights and to join our community, check out the Discord link in the description. Thanks for watching, see you next time.